Again, Lindsay Labonte here, branch manager at the Applied Mortgage team of Harbor One Mortgage. Starting in today on one of our real estate industry professional webinars. Today, we'll be talking about renovation and construction loan programs. I've got some people who are watching live on Zoom. This will also be recorded to be put on our YouTube and our podcast channels. If you're just listening in and you can't actually see my screen, I'll do my best to describe what it is that I am actually talking about. I think everyone knows that right now in this market, we have a huge inventory crisis, right? Plenty of buyers are out there. It's a good time to sell. It can be really difficult as a buyer, and there can be a lot of multiple offer and competitive situations. So many of our recent webinars, per all of your requests, right, we've been talking about strategies for success in this market. And we've got some upcoming webinars where we'll discuss having better qualified pre-approved buyers, in-depth strategies on different programs like maybe buy downs, for example, and also our home run cash back offer program. So stay tuned for those. If you don't get our newsletter, make sure you subscribe so that you can be aware of that. Today, I think an opportunity we have and we'll discuss is finding more inventory by looking at the properties that are maybe being passed over because they need some renovation work. So oftentimes buyers aren't as familiar with renovation loan programs. Sellers may not be as familiar with these programs. And I think it's a really great opportunity for conversation. So we primarily have 3 construction renovation programs that we're using. And we'll briefly chat about those. I'll pull up kind of example of some of the budgets and everything that you can expect, because I think that there's an assumption that it's a lot more difficult and a lot more costly to do a renovation. There's definitely some time, some expertise. You've got to work with licensed and insured contractors and everything, but you can really come out ahead in the end here. So just as a really brief overview of the different programs that we have, the most common renovation program that we use, well, I should say the 3 most common would be either our full construction loan program, which we have, which allows you to buy and build from the ground up. So you can purchase land and build at the same time, or if you already have land, you can go ahead and we can do a construction loan on it, and you can build that way. If you are just out looking for existing properties that need a little bit of renovation, then as far as renovation programs go, we can utilize that same full construction program we have to actually do renovation and remodels, or we also can use either a FHA 203K loan, which I get a lot of questions about, or our home style conventional loan. So those are kind of the 3 most common areas that we're talking in regards to would either be FHA's 203K product, which has a couple of different nuances as far as the type of work that's being done. And then also our in-house portfolio construction loan that we have through Harbor One Bank. And lastly, the conventional home style renovation loan. And I had intended to share my screen as I was talking about these. So this just gives a brief overview. The home style loan conventional program, it's really great for those houses that just need a little bit of renovation done to them, like maybe septic system, roof repair, bathrooms, kitchens, right? Any type of existing house with a remodel. What's awesome about the home style loan is that it is a conventional product. So the appraisal requirements aren't as strict as the 203K. Oftentimes people come to me asking about 203K, and there are other options. So you can also do a lower down payment with home style. It does adhere to Fannie Mae's 3% down payment minimum for first-time home buyers, or even as little as 5% for repeat buyers. So it's a great lower down payment loan option program to do some renovations. There is a cap on the renovations. It can't exceed 50% of the as completed value, but as completed value means when the work's done. So, you know, say you're buying the house for 300, but the as completed value is 500, that gives you 250,000 potential renovation to work with. So It also can't be a complete tear down. If you have a property that really is in, more need of greater work, it is a tear down, or maybe again, you're buying land and want to build, or whatever the case is, then the portfolio, our one closed construction loan that we have, is a really great construction product. You do need 20% down payment or an 80% loan to value, depending whether it's a purchase or you're building on land that you already have or an existing property. So it's going to be for those people that have a little bit more down payment to work with, but it does allow you the most flexibility. There's no limitation on the type of build or amount that you're doing. So again, those are going to be the conventional products. I get a lot of questions from people who are out looking for houses. They've been looking for a little while. They come back to me and they're like, hey, we got pre-approved. We're just not finding anything, or we're getting beat out by other people on our offers. We want to build, or we want to just buy a house and renovate it. What are our options? So again, I think this can be a really great opportunity to help people who are in need and are really just struggling with the lack of inventory that we have. So if you're willing to get a little creative, work with a contractor, that's the biggest piece of the puzzle. So all of the programs that we have, and I don't know of any or many other banks that will allow self-help anyway. So our programs require that you work with a licensed and insured general contractor, and they have to use licensed and insured subcontractors. So the biggest piece of the puzzle is just connecting with a licensed and insured general contractor upfront in the beginning. And then that way, ideally, you can get started on the plans and specs as early in the process as possible. So you may need to identify the property first, have kind of a rough idea of the work that it needs, get the contractor in there to actually look at it, give you a quote and everything. But if it's a situation where you're going to buy land and build, you could potentially start working on those build plans even sooner. So one thing I do also say is that in addition to needing licensed and insured folks helping you, it does make the timeline a little bit longer. So even if you've got your due diligence and you've got your contractor and you're really doing the best you can, once your offer's accepted, it's going to take the contractor a few weeks to get into the property and write up all the plans and scope of work and costs and everything in the format that we need it to be in to really know the type of work that's going to be done. So I do always suggest maybe doing a little bit of a longer home inspection time frame, or even a little bit of a longer mortgage commitment time frame as well can be helpful, and closing time frame. The process is such that we can get the buyer all approved, credit approved, ready to go, approved for their mortgage once they're under contract. But we wait until we have all of the plans and everything, the scope of work, to order the appraisal. So getting all the contracts together is the really, really big first step. And then from there, once we've got all the contracts and we've got the contractor vetted and everything, the appraisal gets done. We have the as completed value, and that's what the financing is based on. And then everything just kind of rolls as it normally would from there. The customer, the borrower, closes on the house, gets their loan. We've got their renovation fund set up, and they're able to start the work. And depending on the loan program, they're going to have a different number of disbursements, meaning the way that we then give them the funds after as the work is being done. Each program has its own slight variation to those disbursements. They all come with re-inspections. And typically, the work has to begin within 30 days of closing. On a renovation project, usually we want it completed within 6 months. If it's a full-blown construction or, like a tear-down renovation, that program would be a year to complete the work. So that's just a little glimpse at the overall timeline and how everything would work. I want to just share more of a case study right now on my screen here, and just talk about how this can really be financially beneficial as well. So again, if you're just listening in, I'll try to walk through and explain this as best I can. And otherwise, you may be able to view it here on my screen too. So I had a customer who was looking for a single family house in the Northampton area. I'm out here in Western Mass in Northampton. We all know that Northampton's a pretty hot market, lots of multiple offer situations. Some properties are getting bid up over 10%, maybe even more compared to asking price. And they were like right in the meat of that market. You know, our median price is around 425 now. They wanted to be somewhere between 450 to 550, somewhere in there. So looking at as is purchases, so just an existing single family house, no renovation, they were going to be finding themselves after, you know, going above asking and all that kind of stuff, paying about 515. They had 10% to put down using a traditional 30-year fixed rate. And it put their total payment with taxes, insurance, mortgage insurance, you know, everything all in around $38.50 a month, right? And they didn't have to do any renovations, so they were just going to buy the house and move in. And that house ended up being purchased at around $515. So if that same buyer, or I'll say a similar buyer, decided that they got really sick of the competition and they wanted to just look a little bit outside of the general super, you know, popular area to be in. And they ended up coming to me and saying, we're kind of seeing some houses that are sitting on the market. We don't really know why. You know, it looks like they need a little bit of work, but is that something that we can work with? Can we get a contractor and can we figure out how to buy one of these houses that needs a little bit of elbow grease? So we did a comparison and we said, all right, if you were going to look at a house for, you know, 450 and maybe pay 515 for it anyway, when all is said and done, if instead you found a house for 315 and it needed this really happened, this home style renovation second column right here that I'm going over, they actually found a property in the 300s, shocker, I know, and they talked to a contractor and it needed some, I think it was like septic repair, roof repair, not replacement, but repair, although they could have done replacement. They needed just some, you know, fixing up, some painting, flooring, kitchen, bathroom, like cosmetic stuff. It came in around $75,000. So this program, the Home Style Conventional, allowed them to finance in the purchase price of the house plus the renovation cost, plus we finance in a little bit of a reserve, a buffer amount in case anything comes over. They did their same 10% down. So the overall acquisition cost was lower than if they had continued to look at these houses that were just going for over asking. So instead of going over asking and paying 515, they found this fixer upper. It wasn't priced low enough where contractors were just buying it to flip it. It was one of those like middle road houses, right? Where it didn't really fit the flip. But people were getting deterred from the repairs. So their acquisition cost for the property was a little over $400,000 versus the 515-ish that they were ending up, you know, falling into before. On a renovation loan, the rate's going to be a little higher. The closing costs are going to be a little higher, but their acquisition cost was lower. So overall, they ended up with a lower monthly budget and less money out of pocket. And the cool thing is that when the house was appraised, the as completed value was quite a bit higher than what they bought it for. So they ended up on this home with more equity than they would have had buying just an existing house and bidding over on it. So I want to just share that as an example of kind of a way that if buyers are feeling really frustrated by this market, there may be opportunities to go out and to look for other properties that are a little bit distressed. And I know there's the argument where people say, well, then cash buyers are going to come and get them and renovate them. But there's kind of that happy medium where it's distressed enough where it's a deterrent for people that just want move-in ready, but it's not distressed enough for the flip, right? And this is where I think the renovation construction play can come in really, really nicely. So that's, again, I wanted to give a brief overview of the programs, that little case study, and just let everybody know so that it's top of mind that there's potential opportunity in that renovation world, I think, to provide additional inventory, open up additional inventory that people may not be thinking about already. Again, wanted to keep it brief because it's going to be uploaded on our YouTube, our podcast. And for those of you that listen live today, thanks so much for being here. I want to remind everybody that we do have our webinars that we host really routinely. Every single month, we host our first-time homebuyer webinars. Those are usually the third Tuesday of the month. So anybody that's got first-time homebuyer clients that just want to be a little bit educated and informed on the mortgage side of the puzzle, this is a very low-key way of just tuning into a webinar and watching that. We've also got our repeat buyer webinars that are typically the third Thursday of every month. And those are for anybody that's maybe thinking about this, right? They want to sell, they want to buy new, they want to renovate, they want to refinance, they want to buy investment properties, whatever is on their mind. This is for people who maybe aren't first-time home buyers. They want that next step up to see what's possible. And then lastly, we have our real estate professional sessions. Our next session is all about appraisal gaps and appraised values and how that impacts the lending side of things. That is May 30th at noon. And then we've got 3 or 4 more scheduled out for June, actually, where we're going to be up in June. So thanks again for being here. You can always catch our webinar lists on our appliedmortgageteam.com/monthly-webinars. Thanks so much for tuning in, and look forward to seeing you on our next webinar. Any suggestions for topics, please let me know. These all come from you. All of your suggestions, all of your questions, we want to answer them live here.